Hello everyone, welcome back to the weekly market analysis on the 7th of November 2021. As everybody is looking at the market, you have already know that the US market has been hitting new highs again. Okay, so if you look at the screen, I've presented this over and over time that we may be able to see peak in November. Okay, so this is where we have a very nice peak over here, and this is where you're going to see after that. So this S&P 500 performance for the past 17 years, we see that the peak at November and then slowly descend or start to hit a break and start to go down in December. So is this going to happen again? So let's take a look at the chart. Have the Dow chart right now, and we are looking at the trading as high as 36,494, inching closer towards our target level, projected target level at 37,659. And if you were to look at and scrutinize the latest candle over here, you may notice that there's some upper shadow, and this upper shadow actually suggests there are somewhat profit-taking action during the intraday. Okay, so would this be the sign of selling? Well, one thing for us to note is that, the infrastructure bill has been voted go ahead, and the bill has been passed to Biden's table. So will the market take this as a strong sign of more bullish action or more positive indication coming in? Well, this is where we will see tomorrow, where the Dow, if it's bullish, it should continue to trade higher and close above 36,494. And if it's a solid white candle closing, there is potentially more upside. Now, last week, I also did mention that we may expect some volatility, especially when the Fed announced the tapering or confirmed the tapering. Well, we did have one day of downside, but the market recovered well during the intraday, and also the next day, although there's some action trying to sell down the market, but the buying pressure comes in to absorb the selling to push the Dow higher. So, well, the next best thing to look at is the continued upward action. But of course, as the Dow climbing up higher and higher every day, there will be a concern. Why? Because the faster it goes, the faster it goes up, the faster it comes down. So these are the concern and voices around the investment world. So a note of caution, trade with caution, don't over commit yourself in the market, because if the selling pressure were to comes in, it's going to be fast and furious. But if you were to refer to the table, it should be coming, towards the December period. So got to watch out during that period. S&P 500 edging higher, going towards our target at 4,813. And we do not see any strong weakness as yet. The volume has been strong as it pushed up higher. So we are going to continue to watch the market and see whether can it really hit our target. NASDAQ, right, as mentioned previously, last week, it has the chance to continue to go higher, despite there might be some volatility, and our target maintained at 16,945. So we continue to watch this level. If all three index hit our projected target, well, I think it wouldn't be a surprise to you Now, China has also announced their export-import data, and it turned out to be good in terms of the export, where they have exported more, and that is a cushion to their softening domestic economy. So that may help the Asian market tomorrow. So let's look at STI. So we have STI breaking up above its resistance at 3237, helped by the buoyant result from the bank. This time around, the banks has announced a fantastic set of results, and no doubt there are some signs of selling after UOB and OCBC announced their result, but they managed to recover well on Friday, and DBS has hit another record high, but the chart shows that it has been moving up cautiously, because of all the, all the candles that have been showing us that there are some so-called uncertainty within the traders themselves. I'm going to show you the chart soon. So let's go to the chart. So we shall take a look at this DBS here. So you can see DBS. Why do I say that DBS moving up shakily? Because you can see it has been moving up with all those black candles over here. And all these black candles are not signs of strength. In fact, they are signs of selling as the bank starting to move up. There are people offloading their positions as DBS trying to ride on this bullish note. So we can see the counter has traded to all-time high again above $32. Right now, the highest is 32.38, although it closed at 32.29. Okay, it is still, consider uptrend or in a bullish mood. But like I say, if you were to look at the candles, it hasn't been very convincing, or it haven't been very convincing. So if we want to be careful about the banks, we shall take note that the bank shouldn't trade below 3207 or the 3194 level, because once the bank trades below this level, it may start to move even lower. Okay, so got to take note of that. Let's take a look at UOB. Very strong closing on Friday, and that strong upward movement has helped UOB to all-time high again. So what we are going to look forward to is any bearish sign going forward. If not, we just continue to ride this bullish momentum. Is it a time to accumulate UOB? I don't think so personally, because no doubt there are still potential to move up higher, but the risk and reward just doesn't make sense. Now, OCBC moving back towards its recent. Now, if you were to study the three banks, OCBC is the only bank that doesn't hit to its high or its recent high, or don't even go to all-time high at all. So it has a resistance at 1204, and its major resistance is around 1220 thereabouts, 1227 thereabouts. So if OCBC breaks above 1204, then we may see more upward movement towards 1227. Okay, so let's keep our finger crossed. Probably if you were to study the whole chart, OCBC is the only, or the three banks chart, the OCBC is probably the only bank that is so-called tradable. Now, going to the tech, last week the tech has a mixed fortune as it moved up and down, like AEM. It is, unappreciated, I would say, or, incomprehensible that this long black candle is formed. At the closing, it matched all the way down, and on Friday it managed to fight back, but it still stalled at the resistance level, where it has this resistance from 425 to 432. So it stored at this resistance as a pullback to close lower below the resistance during the intraday. So technically, this resistance has to break in order for AEM to continue to move higher. Franken has a similar fate as the counters is struggling to break resistance as it move and test 240, but it failed to sustain at the high, or rather 239, it failed to sustain at the high and start to pull back to close at around 230. So these charts are really hard to read right now. So the only way to actually make it easier is to break out and then start the uptrend rolling and then have a nice pullback to a low from another support. Then that would have a better chance for us going forward to enter the counters. UMS, although there are some chance to enter at this low, but unfortunately it did not we managed to rebound from this low to retest resistance, and it had the same type of selling as AEM, Franken, and this is really unknown to us why this happened, but we still have some hope as we see a graveyard doji on Friday. A white candle confirmation, i.e. closing above 134, may help the counter to move up towards 139. Okay, now next week, maybe our focus will be the transport again. SIA seems to have rebounded from this support at 520, and going forward, once it crosses above the 20-day MA, there might be a chance to continue higher back towards this resistance at 558. Okay, the stochastic indicator has starting to build up its momentum from the oversold region, so there might be a chance, but the crucial part is to cross above the 20-day MA, right? SETS is holding at the support level as well, and once it crosses above this 20-day MA, may have a chance for it to move higher towards 441. SI Engineering is a better counter out of the three as it signs new contract with the Thai airline from Thailand, and then an airline from Thailand that is going to supply components, and the good closing on Friday suggests that there might be a chance for it to retest 225 and break out from there. Then we may want to see it test this 230 resistance to continue higher. Well, MACD is showing some positive signs, so hopefully we can see some breakout next week. ST Engineering back to its 200-day MA. As I mentioned last week, the lower high doesn't seem bullish, but the closing is good on Friday as it forms a bullish counter-attack pattern with MACD histogram showing some sign of bullishness, and stochastics are having the oversold crossover. So next week, we really want to see ST Engineering closing higher to close to hit around 387 probably. Then going above 394 will be a good target level, because once it crosses above 394, then we have chance for it to move up to 405. Okay, now let's look at Wilma. Wilma was disappointing. We saw a breakout over here, and an attempt to continue move up higher failed as it pushed down, and retesting back this resistance support level at 445. Okay, the chart itself again is really showing some uncertainty over there. But of course, if I were to switch over the weekly chart, I think the weekly chart would show us more uncertainty over here. As you can see, the week itself ends with a long upper shadow. Will Wilma continue its selling back towards 432? That may be the the nail to the coffin and then push the counter lower. So Wilma, the faith next week is it needs to be strong, so that if it can close above 452 with a nice white candle, then we may see more upside. Okay, let's quickly jump to the US market. Well, Apple, we look at the chart and sees that, you know, the upside remains remains intact, as if it can break above 153, then there's a chance to go back to its resistance at 157. Okay, it pays dividends last Friday, which is good for some Apple shareholders. But of course, for those who you know, looking forward for the breakout, yeah, so hopefully tomorrow night it can happen. Then if you were to follow the video closely, I have a last minute title that shows Meta, and the weekly chart shows us a hammer, and we had a confirmation on the weekly chart. So the daily chart shows us that the resistance seems to be a hard nut to crack at 344. Okay, 344, and it is a daily shooting star, but the weekly chart is strong, so probably we have a chance to negate it if we have a nice white candle. And if you look at the bigger picture, it is a looks like a double bottom over here, and then we may, you know, have a good upward movement if we can break out from 344 convincingly with the projected target back to 371. Okay, so let's keep a close eye on that. Tesla has been really high, and Elon Musk is asking his follower in Twitter whether he should sell his 10% stake. And then there are some news that a lot of their board members has been selling when Tesla hit all-time high at this high at you know, 12,1243. Okay, this could be a tough level to break if they continue to sell, and this 12,143 has to be broken, means that the market forces has to be really strong. Okay, so so what's going to be for Tesla? Of course, a nice pullback will be great for those who haven't gone into Tesla to enter into this fantastic counter. Okay, and let's watch for more possibility next week. Okay, then we have this NVIDIA, which is very strong, but the Friday closing ends as a shooting star, so there might be 1 or 2 days of pullback. Then if the market strength is still there, it should be able to negate this selling pressure from 314 all the way down back to 297. Then this can be easily indicated as what NVIDIA may follow AMD, where you can see a shooting star over here. There was some pullback, but AMD has managed to go back higher, and then now is trading at all-time high. Okay, but of course the closing isn't that pretty for both counters on Friday, so we're going to watch further to see whether if it will come down to test support if we pull back 1 or 2 days. So AMD support is at 128, NVIDIA support will be somewhere around 266. Okay, if we pull back, but reports suggesting that NVIDIA's result is going to be, you know, the outlook is going to be fantastic, so there might be more upside. Then we have Coinbase. Coinbase forming an ascending wedge, which is a sign of weakness, and there might be some pullback towards 297 range around here. But then, of course, if the market ignore this and break out above this upper trend line, which is above 350, there might be more upside for Coinbase. Ultimately, Coinbase hasn't hit this high yet, so if it were to break out above, then we can see more upside towards 379. Okay, then we cover the vaccine counters. Novavax, we mentioned that once it breaks out, watch for the MA above, the resistance above, and it did went to test this resistance and then pull back down due to some announcements. So these vaccine counters are quite volatile. So probably if you have a weak heart, you do not want to participate in this kind of counters in terms of trading. So we are looking at the Pfizer announcing the pill that can actually, kills off COVID. So 89% rate. So we are looking at a gap over here. But technically, if you study the chart, it holds very nicely at this 20-day MA with a doji. So this could help to confirm the support if it can fill up the gap tomorrow. Moderna has this double whammy, effect where it has first announced the future vaccine sales is going to be lower, so the outlook is bad, and then together with the Pfizer pill, it has done a double jump down. So we are looking at it has formed a hammer at its support level at 213, and it really got to fill up the gap in order to continue higher. So it is pretty volatile. So probably you want to avoid this counter if you are trading. If you do not want to have all this heart attack going on. Okay, so thank you for looking at this video. I'll see you next week. Hope that the market continue go up and we make killings again. Okay, good day and goodbye.